So thanks for logging in again, everyone. Today we've got Lucapa and their CEO and Managing Director, Stephen Weatherall. Lucapa is a growing global producer of high-value diamonds from the Lulo alluvial mine in Angola and the Mode kimberlite mine in Lesotho. Stephen's going to tell us much more, but through his presentation, Stephen, you want to take it away.
Thank you very much, Timothy, and good morning, everybody, and thank you for being giving of your time. I see there are a number of participants, all sizes of shareholders as well. So I think this will be quite familiar, but also there are a number of new names. So very nice to meet you informally, and do look forward to perhaps talking to you in more detail in due course. But let me share the screen and take you through our presentation. I hope everyone can see that presentation. The caption there, a producer and explorer of large high-value diamonds. It was not long ago that we could really only say that we were an explorer, and the company has changed and transformed significantly over the last 5 or 6 years into what today is quite a unique and special diamond mining company in our space. So let me take you through it. The usual cautionary statements that I urge you to read. This is the same cautionary statements that you can find on our website and all of our presentations. But this presentation will also be posted on our website following this webinar. Just a snapshot. What I thought I'd do today is just turn around the presentation. Normally one would give you the promotion of the company first and then tell you what we've achieved. But I thought it probably better to highlight the significant achievements of our first quarter of 2021 first, and then take you through the assets that delivered that performance to us in the first quarter, and then also talk to what we expect from those assets going forward into 2021 as well. And then naturally post that, very, very happy to take any questions. So in 2021, we delivered a very, very strong quarter. 2020 was a very tough year. We had positioned our assets to really be at the finishing line at the beginning of 2020. But naturally, with the pandemic globally, we had to readjust our sights. So 2021 started off extremely well with record operating performances across both mines. If you have a look at our mines, our Lulo mine in Angola and our Mutai mine in Lesotho, very, very strong. In Lulo, volume records, 131,000 cubic meters put through the plant in Q1. That is a significant increase over the previous record of just 88,000 cubic meters. So you can see that the expansion fleet there really has started to do its work. Per unit operating costs therefore have reduced significantly. When you're dividing the fixed cost base by 88,000 cubic meters, or you're dividing it by 131,000 cubic meters, you can see the significant impact that it has on reducing our per unit costs on a day-by-day basis there as we go forward. Large stone frequency have been prolific as well. We announced to the market the number of large stones, 100 carats, that we have been recovering from our mine, and most notably mining block 46, where we have been mining recently, has become our most prolific producer of plus 100 carat diamonds. Because of the production of those plus 100 carat diamonds and the very, very large pink colored diamonds, we have produced a significant amount of value in the first quarter. You might not yet see it on the revenue line, because a large portion of that inventory remains unsold, but you will see it through the next quarter. So that mine delivered a 2.1 million Australian earnings before interest, tax, depreciation and amortization. That is before we add the cutting and polishing partnership profits that we'll be bringing back to Lulo from diamonds that were delivered this year, but also diamonds that were delivered to the partnership last year. And with the pandemic shutting down the manufacturing sector, you're going to see the profits that we anticipated last year, they will all be paid and brought through to Lulo mine in 2021 as well. As I mentioned, a significant quantity in inventory that will likely be sold in the next quarter, which will lead us to record H1 2021 revenues in Lulo. A significant achievement in the first quarter of operations there. Also, you know that we spend a lot of time and effort increasing our JORC resource. We also announced a significant increase in our inferred resource carats from just over 100,000 carats last year to our updated resource this year, which is at 136,000 carats. So we have approximately 4 to 5 years life of mine ahead of us in our inferred resource. But as you know, we have got a significant quantity of ground that we still need to go and add into that resource, explore and add into that resource. And we will do that concurrently with our mining operations. At Mutai, daily volume records. And I do note here that this is before the expansion came in. So when we reignited that mine following the pandemic suspension last year, it has done extremely well to get back up to full speed. As we noted last year, we were operating at 75% capacity. We are now at full capacity, and therefore we are breaking records. In terms of recoveries, again, last year, you know, we announced the recovery of the 100 carat in December. In February of this year, we recovered a 213 carat type 2A. That is Mutai's largest and the white diamond ever recovered. Record prices will therefore be achieved, and following the expansion works being completed, we'll start seeing record volumes as well coming through on a quarter-by-quarter basis. That mine, in its first quarter, sales quarter post the pandemic, delivered 5.1 million Australian EBITDA, a very, very significant achievement. That is also before we start to bring back cutting and polishing partnership profits. You will know that we signed an agreement with Sapdeco last year, whereby the mine will benefit from 50% of the upside of all diamonds sold into that partnership, and we look forward to bringing profits back from that company as well. Already in 2021, we have record H1 sales, or revenues, should I say. We still have 3 sales planned for the remainder of H1, so you can see that that mine has turned itself back on, and we're starting to accrete exceptional value there as well. You'll also know that we spent a lot of time last year through the pandemic focusing on expansion, focusing on resource as well. And you know that last year we increased both our indicated and inferred resource carats from 1 million carats to 1.2 million carats as well. So that represents a significant amount or years in life of mine. And you'll also remember that we announced in November last year the expansion and the financials that would that support that expansion and what we expect from that mine. So you can see there as well that significant margins are going to be realized from that expansion. You'll also know from our last quarterly that we returned loan repayments from Mutai. We've had 2 loan repayments this year already, $2 million in the first quarter, and then post-quarter end, another $2 million. So we do expect regular returns from both Mutai and Lulo going forward. So that is what has been achieved in the first quarter. Let me just take you through, for those who don't know Lucapa very well, our journey, where we are and what we expect going forward. Lucapa is a successful developer of diamond projects. And as I noted earlier, we have transformed significantly. In 2014, we were a pure explorer operating in a single country in Angola. Whereas today, through a production focus, we are a multi-asset producer with very significant exploration projects. We own 2 of the world's best high-quality diamond productions, and we have 3 primary source exploration projects that I'll take you through shortly. In 2020, it was an extremely tough year. Our shareholders supported us tremendously through a rights issue in June of last year and allowed us to maintain our assets and keep them intact and continue to focus on our expansion, which has delivered that significant result in Q1 of this year. If we had not had that support of our strong shareholders, I think it would have been a very different result for us. But through that support, you can see what those mines are delivering already in 2021. I've talked about the capacity and resource expansion focus last year as well, so let me just move on. I've also spoken to you earlier about the record performances in revenues and cash flow generation at the mine. So to overview our assets that we have in our portfolio and their development in terms of a timeline, we have our producing assets, our mines. Our first mine that we have, that I'll take you through now, is our Lulo mine in Angola. It is an alluvial mine or a secondary deposit. Our second operating mine is the Mutai mine in Lesotho. It is a primary source mine, a kimberlite mine. Both mines have been explored or evaluated almost from scratch, where our teams here have had a look at how we could develop it and extract value. In Angola, a lot of people might have thought it's too hard. In Lesotho, a lot of people have been over this ground and also thought, oh, well, we can't make it work. We at Lucapa and with our partners have come up with development plans that have supported the economic development of those mines. We've raised the funding, we've developed those mines, brought them into production, but not only have we brought them into production, at Lulo, we have expanded the mines on multiple occasions, okay? So through its 6-year history already, we have increased the capacity of that mine multiple times, where today we are looking at approximately 500,000 cubes per annum. Equally in Lesotho, where we built a 1.1 million ton per annum operation, through the capital raise last year, the 10 million Australian dollars capital raise, where we motivated the significant value that would be accreted from that expansion. We've applied that very well, and come the end of Q1, the construction works were completed on that expansion. We have just recently finished the commissioning of the crushing circuit there as well, so we should see operations now operating at the desired 215 ton per hour or annualized 1.6 million ton per annum. So expanded both operations. But we weren't just satisfied at receiving value at the mine gate and just selling it rough. With these special mines, this special production, there is significant value achieved post-mine gate as well. So with the connections, with our relationships, with our partnerships we have entered into now, we are bringing that value back to both of our operating mines. And it is good value, significant value that is coming back. So the margins that we are making are generally unlike every other mine. I'd like to say that in the last year and a half, you've seen other mining operations around the world, I think, take a leaf out of our book and start to also implement similar structures where they're starting to accrete value beyond the mine gate as well. In terms of our exploration assets, I think everyone knows our Lulo joint venture around the world. It is the most prospective kimberlite exploration program globally. We are advanced on this program, and I'll take you through some of the work that we have done there and why it is at a very exciting stage right now. We also have 2 other early stage exploration assets in Brooking here in Australia and Arapa in Botswana. But as we know, when the world started to slow down in the diamond industry in 2019, we thought it best to conserve cash within the business and stop spending money on the early stage exploration assets and reignite them at a later point in time when we do see the cash flows at a level that we believe we should reinvest back into those projects. So we have kept those licenses intact, and we will be going back to those in the future. But because of the time I have with you today, I won't go through those in great detail. So in terms of our mining assets, what are they and what do they produce and where do they fit in the greater scheme of things? 2 very, very niche mines, our Lulo mine in Angola, that is a photograph of the plant there, and our Mutai mine in Lesotho, that is a photograph of the Mutai mine in Lesotho as well. Unique, large, high-value stones. There are the plus 200 characters that we have produced from both of our mining operations, 2 from Lesotho and 2 from Angola. There are just 5 of the plus 100 carat diamonds that we have recovered from our operations as well. Across both operations, almost 30 plus 100 carat diamonds we have recovered. We also recover a high proportion or our fair smattering of fancy colored diamonds, yellows and pinks. And as I mentioned to you earlier, we recovered some significant pinks from mining block 46 as well. That culminates in us owning 2 of the top 3 highest dollar per carat diamond mines in the world. Number 1 and number 3. In Angola, you know that on average, it's about $1,900 per carat. At Mutai and Lesotho, you know from the recent modeling that we put out that we're expecting in the mid 600s in terms of an average dollar per carat there as well. When the world average is just over $100 per carat, you can see how significant those operations are in the grand scheme of things. So in terms of our Lulo mine, we are in our 7th year of operations at that mine. As I mentioned to you earlier, it is a 500,000 bulk cubic meter per annum plant, and it is the highest priced alluvial diamond production in the world. In terms of what's been achieved to date, I did highlight to you earlier in the presentation what we've achieved. Significant records in terms of volumes through the plants because of the impact of that expanded fleet. The recoveries of our plus 100 carat diamonds have been significant as well, along with 3 pinks, and therefore we will produce record revenues in the first 6 months of this year. Equally at Matai, it is our 3rd operating year at Matai. However, our 2nd operating year at Matai was significantly impacted by the pandemic, where we were shut down for 6 months of last year. But we kept it intact. We kept it, the plant under a proper care and maintenance program. And as soon as we saw the market recover sustainably, we brought it back on stream. It is now a 1.6 million ton per annum operation, thanks very much to the expansion that's just completed. And it is the 2nd highest priced kimberlite in the world. The highest priced kimberlite in the world is our neighbor, that's staying in Lesotho. So very, very special area in the mountains of Lesotho. 2021 to date, 213 carat recovery. We will see record volumes this year. We have seen record revenues and we have seen record prices as well. And that is before we add in the cutting and polishing margins that we'll bring into both the income statements at the operations this year. On the left-hand side there, the 15.2 carat fancy intense orangey pink diamond that was produced from the 47 carat rough diamond from Lula. And on the right-hand side there, the 8.8 carat deep flawless pear-shaped diamond from Matai. In terms of our exploration assets, on the very same ground where we are recovering those fantastic high-value diamonds, we are exploring for the source. We have recovered a huge amount of large stones, 1,300 specials already, 23 of those are greater than 100 carat diamonds. Very, very high quality diamonds, obviously translating into the highest dollar per carat diamond mine globally right now. If we look at the diamonds and their characteristics, irregular shaped, jagged edges do not travel very far. Therefore, if you're looking around you, very close to you, you're looking underneath you and proximal to you, you find a significant kimberlite province. And we have already confirmed 6 of those to be diamondiferous, okay? So we are in a diamondiferous kimberlite province. Our cross to bear in this ground that we have is that we have got a significant number of targets. We can't haphazardly run around and just try and test each target. We've had to develop a methodical, systematic approach to going through these targets, understanding them and trying to refine where it is we need to spend our time and limited capital that we've had to evaluate and progress our ground here. But those characteristics that you see on the left-hand side of the screen there are the very reason why it's one of the most prospective diamond exploration projects in our space. Significant amount of work. I won't bore everyone with the amount of work that's been done on this ground. I certainly, and one-on-ones can take you through the work that we have done, but more than 500 anomalies on this ground, okay? We have drilled about 120 of those targets, confirmed 100 of them to be kimberlites. All the work that we have done over the last couple of years has been coming in and refining our high priority kimberlites through mineral chemistry and analysis of the core. And the yellow dots that you see on this screen here are our priority kimberlites. The area of focus is the Canguige catchment area, where through sampling, we recovered over 40 diamonds, a number of them type 2As, the largest one being 3.75 carats in weight, which has resulted in our focus on this area. This catchment area feeds into the Coquilo River here, which flows north. Importantly as well, you'll know that we've been mining here at Block 46 in recent times, the last 4 months, and the recoveries that we've had from Block 46 that are actually proximal and just north or downstream of this area have been significant with these 100 carats. So we were excited about this area from the exploration work that we had done. We are now extremely excited about this area from the mining that has happened proximal to this area as well. So our focus as the dry season ends is to reignite our bulk sampling campaign on those kimberlites and to put the bulk samples of these kimberlites through the plant. The other major work stream that we continue to work on, and it's not a timeline that I'm in control over, but I'm not going to stop it because it is an important work stream for our market and our investors and our shareholders. We'll continue to push and try and gain a majority stake in the Kimberlite program. And I'm pleased to say that those discussions have been reignited earlier on in the year. They are continuing, so I hope to have more to our shareholders in due course on that as well. In terms of the diamond market, I get a lot of questions as to, Stephen, why is the share price so low? What are you guys doing wrong? You guys need to change what you're doing. I don't believe any of that, okay? We're not changing what we're doing. We have developed one of the most niche projects, well, not projects, but companies in our space. 2 high-end mines. We haven't lost the exploration project that we have. We have developed it and evolved it, and we still have the most prospective Kimberlite exploration program in the world. I want a 10-bagger tomorrow. I want a 20-bagger tomorrow. We are working hard on that. But while we're working hard on that, we are bringing in cash flows and production at the same time to sustain us for many, many more years to come. So we're going to continue on that strategy. And I think it's certainly working well for us if you have a look at this last quarter as well. But let me just take you through the diamond market. Let me just take you through where equities are. And what I've done is I've compared the equities to the actual diamond price as well, so you can see how that's performed. So on the screen now, you can see the diamond price since January 2019. In January 2019, an oversupply from the 2 majors, Alrosa and De Beers, from a number of new mines coming on stream as well, lack of liquidity in the midstream started to impact and weigh on diamond prices. And you saw diamond prices start to come off. When the majors in mid-2019 decided to change their strategy to a price protection strategy versus a volume-driven strategy, you saw an immediate impact and positive movement in prices. So we were looking extremely forward to 2020, having 2 mines in operation, going into a year with rising prices. We were looking very, very forward to 2020. Unfortunately, the pandemic arrived, and as we have told everybody in every presentation, the world ended on that day for the diamond space. Border lockdowns, shutdowns, you couldn't move diamonds, you couldn't get people to site. Even if you were able to sell your diamonds, they were at cutthroat prices. So our prices dropped off tremendously. So all mines shut down. What it did, well, not all mines, let me not say all mines. A lot of the mines shut down. Most notably, we shut down all of our mines for a period of time, and rough production stemmed. But what happened over the shutdown and the height of COVID is that you and I were at home. Our wives, our girlfriends, and in some parts of the world, mistresses might have gone online and started to buy a lot more luxury goods. And that supported the luxury sector and most notably the diamond sector as well. So we saw price support, but more importantly, above the price support, we saw a consumption of the high levels of polished inventories that existed pre-pandemic. And now that we're coming out of the pandemic, you've seen the massive increase in diamond prices, where today we are well above the pre-pandemic prices. So the market recovered very quickly, and that is because we are in a far better position as an industry. We've got lower polished inventory levels, we've got lower rough coming into the system, and with the purchases that happened here during the height, the midstream have got more access to cash and liquidity, and therefore the whole industry is far better balanced, and you are now starting to see the pricing impacts, positive pricing impacts because of that. In terms of the equities, I've gone up here and I've put on 5 listed equities around the world. Okay, Lucapa is the dark blue line. Gem Diamonds, our neighbor in Lesotho, is the green line. Lucara Diamonds, that owns the Karowe mine in Botswana, is the pink line. Mountain Province, that is a co-owner with the Gachagua mine in Canada, is the orange line. And Alrosa, one of the majors, the largest listed major in the world, is the brown line. So if you have a look at listed equities, as the prices started to come off, the whole market felt the same pressures, all the prices came down. When the prices started to improve, the only mine whose price started to track that, share price started to track that, was the major, Alrosa. When the pandemic hit, everybody's share prices crashed, came down. But what has happened since? Have the share prices recovered and tracked the positive movements in the diamond prices going forward? Well, let's have a look at Alrosa. If you have a look at where we are today in terms of the average diamond price on the global rough diamond index, we are back to January 2019 prices. So the market has dipped through various problems, but it has come back to January 2019. What has happened to one of the largest diamond miners in the world? Look at Alrosa. Its price has tracked back to where the rough global diamond price is. What has happened to the rest of the sector? If you have a look at the rest of the sector, you can see we have not tracked and we have not recovered. Gem Diamonds is trying to make a recovery, but by and large, everyone is at its lows. And therein lies for us an opportunity for those people who want to come into the diamond sector. I'm not just promoting Lucapa here, this is an overall industry dynamic here. So I do believe there are a number of cheap stocks, of which we are one. But if you have a look at where we are today, there is a massive gap between the share price and where the industry has recovered to. And I don't believe that that is going to last for very long. So if you're looking at picking the bottom of a market in any cycle, in any mineral, I don't think you need to look much further than the diamond industry and this graph. This graph only represents what has happened globally in the average diamond price. As I pointed out to you a couple of slides earlier, we don't average on the overall industry. We have high quality, large diamonds, and that recovery has been far steeper than the global average. So it shows you that there is a wider gap. How long is that going to last? I don't believe it's going to last for very long, and therein lies the opportunity. So that is the overall market where we are. In terms of our focus 2021 and going forward, continued production and cash flows and exploration and development success. In terms of our production, we're going to continue to drive production, carats, and we're going to continue to optimize our costs. We're going to focus on delivering record performances as well, because that obviously delivers record cash flows. In terms of what we're going to expect from operations, I want money back to the center here. For the last 4 or 5 years, delayed because of the pandemic, unfortunately, we have been supporting and delivering cash to our operations in terms of growing them to where we want them to be optimally and operationally. From 2021 onwards, we are going to see cash flows coming the other way, but not just from one mine, from both of our operating mines. So we do anticipate strong cash flows coming back to the center. From an exploration perspective, as soon as the wet season ends, we look forward to continuing our bulk sampling program there, and we'll continue those majority stake discussions and furthering that aspect with our partners. Lucapa wants more activity and foster results coming off that ground as well. We believe with the majority stake, we can secure the funding to expedite that program tremendously, and that is what our partners want as well. So we're working collaboratively, and we hope to have news in that regard down the line. In terms of growth, we continue to look at opportunities for our company to continue to grow. We've had a huge focus on production. We want to continue focusing on operations or projects around the world that can bring us more production in the near term and grow our carat profile. As a producer, we want projects and a pipeline of carats and tons, not just this year or next year, but well into the future. We don't want to be a producer for 5 years. We want to be a producer for 20 years. So we've got to focus on assets that bring us a pipeline of carats now, a pipeline of carats in 3 to 5 years' time, a pipeline of carats in 5 to 10, and then beyond that as well. So you will all know that we have looked at Merlin. You'll all know that we are in discussions with the liquidators. We are still finalizing certain things with them. We hope to have something to you in the near future, but we are also required to tell you that it is not a certainty. Only when the ink dries on any agreement will it become a certainty. But there is a 4.4 million carat JORC resource there. There are diamonds in the ground. We are not exploring for those. Those are in a JORC compliant resource. There will be further expansion opportunities at Lulo and Matai as well. You all know that the original plan that we had at Matai was to take it to 2.2 million tons per annum. But I think we'd like to let Matai operate at 1.6 million ton per annum, get the cash flows up, start returning funds, and let's see where we can take it beyond there as well. You know, we've got a huge patch of ground in Lulo and Angola from the legal perspective, and therein lies a lot of expansion opportunity there as well. But we just want to get the cash flows up rolling there as well. So for the foreseeable future, we'd like to just see cash flows being generated as opposed to perhaps reinvesting in capacity expansions there as well. So where we planned 2021 to be a defining year for Lucapa, I think in the first 4 months of this year, it is already a defining year for Lucapa, and we anticipate more of the same going forward. So I'm going to end my presentation there, and thank you very much for your time.
Hey, thanks again, Stephen, for taking the time. We've been supporting Lucapa for a while now, and we found, Stephen is interested in building a sustainable business. He does what he says and says what he believes. So very happy to supporting Lucapa in the long term. But Stephen, thanks again for presenting.
Thank you very much, Timothy, and to you and to SparkPlus, and thank you to everyone who joined the webinar this morning. Thank you.
Thanks. Well, Stephen, we'll catch you in the next one. And thanks everyone for logging on today.